morning. Welcome to Generate's Investment Update. My name is Kristian James and I'm Head of Distribution. Today it is our pleasure to have with us Generate's Chief Investment Officer and also co-founder Sam Goldwater. Good morning, Sam.
Morning, Kristian.
So today's focus is going to be on private assets, otherwise known as unlisted assets. So can you just tell us what type of investment assets does Generate invest in?
Sure, absolutely. So we invest primarily in two private assets. They are private equity and venture capital. So probably worth talking a little bit about what they are. So private equity is any equity investment into an unlisted company. And vanilla private equity tends to be investments into mature companies. And then venture capital is a subset of private equity, and that tends to be in earlier stage companies with high growth potential.
So what was behind your decision to invest into private assets?
Sure, yeah. So for many years, all of our equity investments were in either direct investments into listed companies or in funds which were predominantly invested in listed companies. But as the Generate's investment team has grown, it made sense to further diversify our asset classes, and private equity and venture capital is a great way to do that. We also want to do a bit for the local economy, and investing in early stage companies is really nice way to support the economy.
Okay, and so what private equity investments have we made to date?
Sure, yeah, so our very first foray was into a company called Skyline Healthcare. Now Skyline is New Zealand's largest air ambulance service provider, and over the years it's been a nice little earner for Generate's members, but it's also got the added benefit of having a positive impact on the communities that it operates in. Another private equity investment worth highlighting is we committed $25 million to a US private equity fund. It's an infrastructure fund. What drew us to that investment was the focus on data centres and renewable energy. So Generate's had a fantastic experience investing in those asset classes in the past, and so we're pretty excited about putting some more capital to work in those spaces. Its largest asset is in a company called Nova Data Centres, and Nova is rapidly building and buying data centres across the US. I was lucky enough to be up there a few weeks ago. Had a tour of one of their data centres, and it was really quite something to see, just the sheer scale. The CEO said that they could fit 7 jumbo jets just in that one data centre. So we're so excited about that investment that we've actually invested directly in that asset as well as through the fund. And another key asset is an investment in a solar farm in California, and given the insatiable appetite for renewable energy, we're feeling pretty good about that asset as well. Currently we're looking at a healthcare and education private equity fund. The key assets there are a rapidly growing tattoo removal business and also rapidly growing IVF business as well, so that's looking pretty interesting.
Oh, those are fantastic investments and quite a broad range as well.
Absolutely, yeah.
And so what venture capital investments have we made?
Yeah, so we've invested in a MOVAC growth fund. So the sort of stage of investment there is companies that already have some revenue, and MOVAC has a proven track record of investing in successful early stage high growth companies. For example, they invested in TradeMe very early, and also they're invested in a company called Mint Innovation, which is making some great strides. We've also invested in an Ice House Ventures fund. That's a similar stage of investment, and what drew us to the Ice House was they get the best visibility on deal flow in the venture capital space in New Zealand. They support and invest in a lot of seed stage, so very early stage companies, and so they get follow-on investment opportunities when the companies start to generate some revenue.
Also great investments as well.
Here's hoping.
So like, this is fantastic that Generate is investing into private assets and importantly into New Zealand Inc. Whereas we're seeing a lot of competitors aren't investing into private assets. So why do you think that is?
Yeah, so what I tend to hear from our competitors is that the rules in KiwiSaver around liquidity and unit pricing inhibit investment into private assets. We obviously disagree with that. Generate and a few other KiwiSaver providers are leading the way in private assets and showing that it can be done, particularly when it's not a huge amount of your overall funds under management. It does take a lot of work to get these investments over the line, and I think it's a lot easier for a competing fund manager to just top up on their shareholding than Apple than do the hard yards and do the due diligence on these private asset opportunities.
So just a last question for you then.
Sure.
So what do you think is the right amount of funds under management that should go into private assets?
Yeah, sure thing. So, for our growth funds, somewhere between 5 and 10% feels right. Obviously, a little bit less for our more conservative funds. That is enough to provide some helpful diversification for the funds, enough to support the local economy without running into too many or running into any headaches around liquidity and the likes.
Okay, well, thank you. And look, thanks Sam for providing your insights into private assets.
My pleasure.
And thank you for joining us for another instalment of Generate's Investment Update.